welcome. Welcome, good to have you all. Great to see you. I'm going to get started now. I think we're going to get live in a sec. Should be live now. Yep, live, awesome. Anyone can't hear me, see me, anything like that, let me know. And of course, I'll change things around a bit to suit. I'll give a minute for everyone to come in. I've let everyone know we're starting. I think we're about all set. Quite a lot to talk about. Lots of you guys who are my members, I'm sure you've come along as well. If you are a member and you've paid and you're in my paid trading academy, please send me your questions if they're in detail via DM. If you're not yet on board and trading is something you want to be serious with, you want to actually make money doing it, I day trade myself. I have for a long time now. I teach people all over the world how to do the same thing. If you just go to this link here, it's right in the middle of the screen. It's HTTPS. Actually, what I can do is I can type it out myself. HTTPS, too many S's there. bit.ly, nice and simple, /trade WTT. So what that will do is that will take you to my page where you can get on board. There's a money back guarantee, and like I said, I teach people all over the globe now and day trade myself. My streams are usually very popular as well, so that's how you get on there, and I've got the link right there as well. So don't forget to get on board. If you do find this helpful, do please press the like. If you're just coming in now, please press the like. I really appreciate it when that happens. It brings me up the ranks. People come on their computers for the London session, they see the stream and say, wow, this must be helpful, and they watch it. So please do press the like if you're coming in. We're going to go over a lot of stuff momentarily. I've updated various posts that I've made, so we have got a lot to talk about. There's a lot of guys coming in now. Welcome guys. Don't forget to press the like, and let's get going. Ask a question in the chat box too. The live chat is there to be used. If you want to look at any particular chart, let me know. So I'm going to kick things off with index markets. I shorted the FTSE last night. Okay, I'm now well in gains on it. You're getting a bit of a bounce now, but I think you'll pull lower. I would lock in gains if I wasn't doing this stream, but I'm happy to let it run. I think you'll get lower anyway. It's starting to tip to the downside. Not many people trade the UK 100, so we'll skip off it just for now. But what we can look at, which is what's really interesting, is your S&P E-mini futures. You can see this enormous gap up this morning. Okay, now normally I keep my news sources to the right hand side so I can read it off while I'm doing these streams. And what you saw, really, this came sort of last night if you're on UK time, and you saw the market just gap up. And really, you know, that comes from Fid Bostich, Fid Williams, lots of different comments going on. And that's led your market to gap up. Now, it's ideal, really, this gap up, because what it does is it allows you to look to reverse those gains it had. Morning in the chat, nice to see you. And really, within this, I mean, I've done a lot of posts on it anyway, but my overall bias for your S&P E-mini futures is to the downside. I think you'll continue down. I think this is the beginning, potentially, of the end. Maybe not the end entirely, but more or less what I'm looking at is something like this to start to happen. Okay, you can see the early bones of these down moves always look like this. They involve some kind of retracement before a further move. That is repeated throughout, and that's why I only ever tell you, you know, where I'm shorting in line with these pops, because you really shouldn't be shorting if you haven't had a pop. Whenever you're selling at the bottom of a down move, you know, you're just putting yourself in danger for the market to reverse and start to climb. So the reason why, and myself and a friend of mine as well did a post on this. He did an editor's pick. I gave him some coins on it. I don't know if I can get it here, but it's on the editor's pick page. It was a good post. And similarly, you know, like myself, I think you're going to see the S&P futures market start to fall. Now, the reason why is because normally what happens is, and I think it's best for me personally. I mean, the post I was referring to and the person I was referring to, there's a lot of macroeconomic or larger fundamental factors that are focused on. But for me personally, lots of you know I'm a price action trader, but I do use market sentiment to gauge what's going on. Now, often what happens is the market sentiment that rules a larger down move is not so easily displayed. You won't find many summaries unless you look hard, which tell you the state of the global economy or the US economy or where debt is and things like that. You can read and surmise yourself, but rarely there's a big chunk of paragraph that says how awful everything is. So you haven't got that. That's why this isn't pulling down yet. If that was the case for many people, they would all have the same bias. But for myself, I like to make things easier. Okay, I do rely on market sentiment, don't get me wrong, and my view as well is that things are crumbling, going to crap. But I mean, even so, how many red candles have you got within this up move? There's one there, there's two, and there's three, and then there's one right at the top. Okay, now the one right at the top isn't even that important because you're already coming straight back up, aren't you? You know, the market is already pushing straight back into it. So the fall has hardly done anything, in other words. Okay. Now, this fall came because the market sentiment then said, all right, well, things do look a bit bad. And it was far more obvious for the mass trading community, investors alike around the world, to say, well, perhaps things do look a bit hairy. When it's obvious for people, that's when they panic and they sell and they liquidate their long side positions. And then when it becomes obvious that that's not the case, you get rejection. And you come to the exact same point where you fell before. Now, my main problem with all of this, and the reason why I look at this as a short, longer term, is not, I'm fully aware of the overall underlying market sentiment, but mainly for me, it's about the price. Okay? Just forget for a moment, I don't know if you can actually hide the ticker. I've hidden the whole chart. Just forget it's the S&P 500 E-mini futures. Just forget it's that for a minute. Imagine this is like, let's say, a house, okay? And your house has gone up. Let's make it really simple. It's gone up from $750. It's now worth $4,750 in the space of 2009 to 2022, right? So 100% would take you to 1,500. Okay, double that again, you've got 300%, right, and so on. You know, you're looking at 500-600% as a move up, right? Now that is obviously a lot. Okay, in the space of 13 years, it's an enormous move. And you have to ask yourself, how sustainable is that? Is this actually reality? Are these prices really what they should be? Is it normal for things to go up that much in that period of time? And the answer is no. I mean, if you look at anything else, and by the way, anyone who's interested, I trade stocks very frequently. I have for years, and I'm bringing out a stock trading course. I'm making it and I'm taking early bird orders now. It's going to be much cheaper in the early bird phase, and when it goes live, it'll cost more. So if you want that, just send me a DM on Discord and I'll put you a space down so you can get it. It works really well, but it's another video series and covers a lot of information. But if you open up something like Tesla, you get a similar story, and it's the same across the board. It doesn't matter what it really is normally. I mean, if you look at how you've gone from 23 to 400, right? That's massive. You know, 1700% up. What happens? Well, you tell me what happens. Gets absolutely turned over, right? I mean, the story goes on. It doesn't really matter what it is. PayPal, $300, boom, 60. You know, it comes straight down. Okay, so, Bitcoin, even Bitcoin, look, it's 2016, you start to gain momentum, bang, what happens? Everyone liquidates and it comes down. The story is the same. The growth is too fast for what it's worth, okay? or really what it should be worth at any time. So that is my bias. I also agree that you've got that negative market sentiment underlying, okay, economic factors that you're not seeing written constantly everywhere else. But for me, it's the speed of the growth. It's just too much for what it's worth. Like I said, especially now what it's worth, okay, because people are starting to not have any money, which means they won't spend any money, right? So pending, I think you're going to get a much larger fall long term. That's why my bias is short. That's why I'm not buying it at this point. Okay, because I'm running the risk of buying before a crash. Okay, and you'll see more and more people start to talk about this. It's starting to teeter along. I've done posts, they haven't been editors pick, some of them. I've done posts about it, the Nasdaq, the S&P, like this one. So long term, I'm looking short there. I think the UK market as well is just pending getting absolutely rinsed. The economy here is terrible. I am buying the FTSE, however, because you have come down from over 8,000 points. So I buy and sell it anyway. I day trade the FTSE very accurately. A lot of you know that. I think you're going to get lower. I think you're going to come under here eventually, long term. So I'm short at the moment on it anyway. I will be long when it comes lower, and then I'll be short and I'll be long and I'll be trading it in the way it looks. Because remember, as I said, this is how markets operate. Okay, it's just one retracement inside another. I did a members private analysis covering the whole thing. Okay, about how markets are just one retracement in another retracement across all time frames. They're a constant oscillation. That's why I'm buying and selling. And I think ultimately, like this, and then like that. You're not just going to short into support, because that's not how I do things. And again, like I said, it's not in line with that oscillation I was talking about. So, German DAX, I think you'll get lower as well. Again, I'm not shorting into support, but I think you'll get lower. That remains my bias. But it's a really important lesson there. And I did a post on this. I think it wasn't a video actually, but you just have to remember anything that comes up really, really fast. And this will be in my, well, there's a bit more to it, but in my new stock trading course, it becomes a lot more clear. More or less, I look for value and sustainable value. So you've got your German stock market, UK stock market, global indexes, basically. I mean, you can even look at your Oz 200. Okay, I think you're lower as well. That is shaping up. You can see you've got these candle wicks are getting closer and closer. And if you follow me, you'll know I'm not big on pattern trading. I'm not really a pattern trader. Okay. But I look at them a little bit differently in regard to the fact that when you do pull into these lows and then the highs, it's got to go one way or the other. Given the market sentiment and what the global economy looks like, I don't like it to the upside. And you haven't bought much of a chance to see which ticker you discussed. Thanks, Graham. Graham, someone asked me to do that before, then someone asked me to remove it, then someone asked me to add it and remove it and add it and remove it. So I'll probably leave it how it is now. You should be able to see it up here on the left or up here. I should think. I mean, I can see what I can do, but a lot of people have asked me to remove it and change it and chop it. But it's nice to see you again. I know you've been here for a while, so yeah. But yeah, you should be able to see it at the top left. It should say Australia 200 index. If you can't see that, let me know. So your FTSE's pulling down again. Still, I'm still holding gains. This is going to be a bit contentious, this area here, so I'll probably pull after another 10 points for gains. So that's good. Set to light grey. It looks black to me, and it should be black on your screen over here. But yeah, like I said, if I put it in the middle, some people then have problems seeing something. So yeah, you'll just have to probably look at it harder, I think. Or I'll try and make sure that I say it loud enough. You should see me click it as well. But yeah, that is where you can see it at the top. If I put it in there, then other people have a problem with how they can see it and it needs to go. So I'll leave it how it is just for now. I may change in future, but thanks for suggesting it. I appreciate that. Oil, I think I prefer it slightly above this previous high. I've got orders set. Okay, what I'm really looking for is a reasonable pull up so I can re-short in the market. You can see you pipped above your 38.2. If I stretch my fib to that high, that's about where you came to. Now, the problem is lots of people think that Fibonacci levels work by hitting the lines that are drawn, okay, hitting these and then bouncing away. That's not the case, okay? That's just not how things work. You don't hit the lines and then the magic happens and you fall straight off it. It's not about that. People do use them as reference points, but fib levels should be there mainly for you just to gauge value. Okay, I like it short, slightly above nearer $90. You're almost there. I think if you don't get $90, then you will get up here to 93. I'm happy to add, just because of the way my portfolio is at the moment, but if you're probably risk averse, it might be wiser to stop at 93 for shorts. It's just because that's a reasonable retracement. If you look at your weekly, like I've got here, you get rejected off the bottom, okay, where we bought many times, and you've had weeks and weeks of up move. It's similar to what I was saying before. It's just not sustainable. The market sentiment at the moment regarding oil, the cutting output puts up the price. That remains now, but obviously it runs out eventually, and it's where we'd like to short. Ultimately, when that sentiment tires and it's gone up for too long for the same reason, price becomes more negotiable. And that's how markets flip. Okay, so the sentiment rules, and that's basically, if you're not familiar with what I mean by that, and you've heard me say it for a long time, the sentiment basically is the mood of the market. Are people seeing it long? Are they seeing it short? Now, like I said, if you're cutting output, okay, there's a lower amount of supply, and therefore you can't get it as easily, therefore the price raises. So if you're looking short within that, you can expect the price to keep going up, because what rules the market is the sentiment overall. Okay, price action points are more or less to get you a better entry or a better price. You know, if you go out to the shops or whatever and you're just looking for the best time to buy something, you'll probably look for a price point which is attractive to you based on what you think it's worth. Now, it doesn't matter what you think it's worth. It doesn't matter what you think oil's worth. Okay, nobody cares. It's about what the market thinks it's worth. And that's where price action comes in. So if I know the sentiment is harsh, I might just ease off slightly and I might just say, you know what, I like it short slightly higher. But that does come within this move up. Gauging the value of the market, you can see that we've got room. If you're just coming in, do press the like button. It's on the screen. If you're serious about trading as well, the link is in the middle for you to get on board. So done oil. I am going to talk about gold now. I did an editor's pick on it. 40-something thousand people have seen it now. I spoke a lot about not buying on this fall from here. The reason why is because you have weak rejection zones. There isn't much reason, in other words, for people to be buying it. That's why ounces like this, very minor. You've gone from 1915 to 1925 area. Now, some might say, okay, well, that's a reasonable move. And it might be if you're scalp trading, but you can see there's very early rejection. So you don't really have a significant move. All you've got is a little bump on the stairwell as you fall down. Okay, so you don't have an enormous lot. Now, seconded with the fact there's light rejection, you can also see there's various price action levels beforehand which are stopping the buy side bias. Okay, you can't be buying into resistance where it's strong because you'll just get rejected away. So I think the weakness in the market like I said, with the sentiment is stopping this from rising, and you've got that coupled with all your PA levels along here, okay, and that's stopping you there. So I think you'll come down. I think you maybe get a little trickle like before, like this, and then I think you'll get lower ultimately. That doesn't mean, and it's really key to say this, it doesn't mean I'm going to sell it. Okay. The reason why I say that, yes, I think it's going to go down, but it doesn't mean you have to sell. Okay. The reason why I'm not selling it is because it's not in an ideal place for me to get short. I just think that over time it's going to creep down. It's likely that within those falls, you're not going to get very far. So shorting it, you would have to wait and wait and wait, in other words. So I just let it move itself. You don't have to be in the market. Okay, all I want to do is buy when it's applicable to me. Doesn't mean I'm going to short it, okay, because the price isn't particularly high anyway. If I wanted to short it, it would be up there, or it would be up there, or it would be there, not here. It's halfway down, okay? So that's why, I'm happy to let things move. I'm happy to wait. I've got all these other, this is why I teach my members to diversify their portfolio greatly. It's because there's all these other lovely things you can trade. Don't get obsessed with gold. People who get obsessed with one asset normally trade too large and end up losing everything. Okay. Quick run over. I'm already long on your pound dollar. Okay. As you probably would have seen, I said about all these price action levels here, and they're very much ideal. I don't think it would completely shock me if you teeter slightly lower. I think I'm in relatively early, but nonetheless I'm holding for long side gains. Okay, this isn't pushing too much because you don't have a lot of sentiment at the moment. You don't have a lot of news, but I think ultimately you'll come up. Now, if you don't, then I'll initiate my second round of DCA plans, and I'll further into the market under 123. Okay, or perhaps about 1226. Right, so I'm going to long again because, like I said, you need rejection to get rejection. If you don't have any of it in the market, you're not going to get that. Wouldn't shock me if the dollar gains and price moves down as well. I've done loads of AUD posts and loads of New Zealand posts. I think you'll get under here for longs. Same thing here. I think you'll trickle down. Don't see much strength in either of these things at the moment, and I think you'll get under. So I won't spend any time on those because I've spoke about them relentlessly. Your euro dollar, like your pound dollar, I really like long as well. I'm long with this. I'm long with pound, long euro. I'm just not long on New Zealand dollar and US dollar, sorry, AUD dollar. But just look, open your eyes for a sec. 1, 2, 3, 4, 5, 6, 7, 8 candles straight down. You've gone 8 candles down in a row. And it has to be said, how far do you need it till you get long? How many candles do you want to appear on the red side before you say, you know what, perhaps I'd like to buy this? Is it 10 candles? I mean, how many candles did you get before? 1, 2, 3, 4, 5. There's 5 candles there. 1, 2, 3, 4, 5. 5 candles there. You've now got 8 candles here with no up move. Okay, you should definitely be long. Really wouldn't want to short this. I'd look for the fast exit. Oh, 1, 0, 100 pips. Okay. Fits within your newfound uptrend. I don't think really you've got enough dollar strength to keep pulling it down, but I am certainly long on the euro dollar, the pound dollar. I'm short the dollar yen, really like the dollar yen short as well. Similarly to what I just said, how many of these candles do you need? I mean, 1, 2, 3, 4, 5, 6, 7, 8 candles more or less up in a row because this red one is rejected strongly. Your stochastic oscillator is flying high. You've already seen the market fall from here. You've got to think, why would you not want to short it? Right, it's basic market economics. Right, if you come from all the way down here, 1275, you get to 1475, things in your brain just start saying ding, 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 ding. What should I be doing? Peaceful Antelope is the one. Ah, I see. Peaceful Antelope asked me, "Am I just teaching people for the money?" As he knows, he got a good response. The answer's no. Trading can be boring. If I sit here in my office on my own, I'm not with anyone. I don't have colleagues. You've got to do something with your time. I like the question about the US CAD. I appreciate that. I'm also short, but how long is it going to take, Peaceful Antelope? How long can I sit here waiting for it to fall and do nothing on my own? If I sit here and wait for it to fall, and it takes days, I'm going to have to just wait, do nothing. I'll make money on the fall, but what am I going to do in all that spare time while it falls? The rise from here, look, 1, 2, 3, 4, 5 candles straight up. Took 5 days. If you're not teaching anyone why they should get short up here, you're going to do nothing for the 5 days. I'll make money on it, but what else can I do? You can't move the market yourself. So I'm short. Yeah, I'm short as well. If you're short from last night, I'm also short from last night. Well, actually, earlier in the day. What's happening is you're rejecting early. It's a question of time, I think. I think you could dawdle around here. Longer term, I think you come down, but again, you might get bored if you're not teaching anyone because it can take a while. Hourly, you're pushing up from here. It looks weak. 4 hourly, you've got your rejection. So I would focus on the higher time frames more or less. But I like it short here, and I'm short now. I wouldn't be shocked if you get up there. And ultimately, if you get up here as well, it wouldn't surprise me either. So I'm planning with my full trading plans that all my Academy members have, with correct sizes and loss mitigation because I entered earlier as well. So my answer is I like it short there too. I was long on various yen pairs like the New Zealand yen and the AUD yen last night. I think you had some AUD news last night, pretty sure. You had some Japanese news as well. So I'm now looking short on these to short the impulse after this rally. Okay, I'm short. New Zealand yen, I haven't actually got the ticker, I don't think. I'll have to add it to the list. I'm short on the New Zealand yen. It's pushing a lot harder though. I think I'll probably reshort. I'm going to reshort up here. If you get there to later today, that'd be ideal. Whether you will or not, yet to be seen. But I like it short up there as well. So I think that answers a lot of questions. Has anyone got any other questions in the chat box? Remember, if you're still not on board, I haven't refreshed the likes, but if you can press the like, okay, as you come in, I'm now going to take further questions if anyone has them. Press like there. And of course, if you're serious about trading, you're an action taker, the link is in the middle of the screen. I always say you can watch me for free for so long, you can keep doing it and doing it and doing it, but it's unlikely you'll ever get anywhere in reality. You might make better decisions, but to make things actually work, you need the correct risk size and you need to know how to hedge. Otherwise, what I'm doing is not going to work for you. And lots of people find that. Some guys sit here for 5 or 6 months watching and watching, and then they quit. And it's a complete waste of time. So all I can say is don't be one of those guys. I might look for intraday gains via this. Oil I've done. Samo, I like it short about $90. That's what I'm looking short. I'm still short on the FTSE now. I'm short for London session gains, along with this. I don't think we're going to get under here today, so I'll probably kill it off. I think ultimately we will. Okay, but all markets are a matter of time. They're literally just time. Some moves take longer than others. Within that move, you'll have a long and a short and a short and a long. Various different entries. So yeah, I think I've covered a lot. I do like the pound dollar long. I like the euro dollar long. I'm waiting on gold. I like the dollar CAD short. So yeah, there's more guys coming in. So I'm sure someone has got to ask something. I mean, the overall state of the market really is just a confused one. I think pending what you've got is a situation where you'll probably get some kind of news come into the market at some point, move things around a lot. And the reason why I say that is just because if you look at gold, for example, it isn't very eventful, is it? I mean, each candle isn't really doing much. You've got two larger green candles here and two medium-sized red ones, but there's nothing significant, not like this or this. It's just because people don't really know what to do. I think as well with your S&P, it's the same. I mean, you've dawdled and dawdled and dawdled. You haven't really got any big shocker red candle like that. Okay, I mean, you've got one there, but more of that would be bloody. I like people with a sense of humour. Yeah, well, I like to have a sense of humour too. Otherwise, again, you'd be bored. But yeah, no worries. I was only kidding anyway. So yeah, we've got loads of people in here still, guys. I mean, I would hope someone has something to ask. If it's about silver, perhaps. I like silver long. Again, I'm not much of a pattern trader, but sometimes you can draw lines like this, and you can query to yourself, is it a coincidence? The answer is no. The reason why is because what's happening when you get this is price is getting tighter and tighter. The margins are getting thinner and thinner and thinner, right? People are getting more worried about what way they want this to go. Now, problem is, people will say, well, if silver comes under here, I'm going to short. Why is that a problem? That's a problem because if you sell down here after it's fallen, it makes absolutely no sense. Why would you not sell up here or sell up here? Why wouldn't you buy here and buy there? Hasn't that worked before? But suddenly, you want to short after. Okay, so breakouts, that's why they don't work, because you're only ever going to know it's broken out after it's broken out. And by the time it's broken out, you've got no market value. You're selling into support and previous rejection, which is false. Okay, so it makes absolutely no sense to do that. You're going to sell into an area where this happened. It's lunacy. Okay, don't be one of those guys. That is where you buy. That is where you buy. And that is where you buy. Just going back as well, it is a very valid question. To be honest, there are lots of guys on TradingView, you're absolutely right, who literally just sell courses and that's their income. They don't really care about teaching people. That's the difference with me. I enjoy the teaching process. So anyone who comes on board my academy gets helped and helped and helped and helped. And lots of guys will testify that. As long as they ask me the questions, I help. So that's why I do it. It's boring otherwise, but I like teaching people. I like getting across the way I do things personally. It's what gets me up in the morning. I don't think I'd be able to do this if I wasn't teaching people. It would just be too boring, way too boring. I've ran various successful academies teaching people how to make money on the internet already. Okay, and I've sold loads and loads of courses. I've taught thousands of people, so I'm well used to it. EuroCAD, someone's requested kindly, thanks for that. Okay, well, I'll start with the weekly. Again, you've got this dawdling. I was long this morning on the EuroCAD, I'm out for gains. And I don't really like the EuroCAD now. I'm not really interested. I think you might get higher today, but it's a very choppy market and I'm not too concerned with it. I would say if it comes higher, I would like to reshort it. And that's all I have to say on this. Otherwise, I'd probably leave it because I'm out of longs. You might see it higher, but it's very, very choppy. Gold, I've done in detail, so you have to just rewind it. I think you'll get lower in short. There's a really good question here. I have a question about risk management though. is it not dangerous to part your equity with hedge? You have to retype that, I think. Hedge and DCA rather than just use stop losses. I guess my question to you would be why? Why is it dangerous? Well, why is it more dangerous? Because it's absolutely not. I mean, the problem with stop losses is that if you place one and it gets hit, you're out, and that's it. It's over. Okay. And it's the reason why a lot of people lose money because they don't understand the full swing of the market. They don't understand the full spectrum of the market. You know, gold, for example, can go all the way from here to there, okay, and there to here. So I think it's more risky to use losses than not use losses because what you can do instead is you can trade loads of assets, much smaller size, and hedge those assets and DCA to use that money to eradicate what you got wrong. So using the profits to get rid of the losses. That gives you a chance to trade the whole cycle of the market. You can trade this. Okay, you can't do that with a stop loss because if you tried to keep shorting as this rose up, you would be out through time, wouldn't you? And you can see, like I said, the market's now pulling back, so you'll have a chance to exit anything you had here. You would have made enough money already via DCA and hedge to close those losses now. So no, I mean, you would only know that if you're on board and you have full plans. So that's your answer pretty much. It's not more dangerous, and if it's not working for you already, I would say furthermore, if it's not working for you already, that's your answer. You know, a lot of guys ask me many questions, but if you're not making money already trading, then you know you're not doing anything right. And there's no point in having a premium TradingView membership as well if you're not making money, because it's just extra expense. But that's for another time. Good question anyway. The answer is no. I don't use stop losses. I don't think it's better to use a stop loss. And I don't think universally that's something that works for the majority of people. That's why I take a different approach. That's what spurred me on to take a different approach because I was already using stop losses when I began and it wasn't working at all, believe it or not. So I had to make a change. I had to say to myself, well, if this isn't working, what can I do to benefit myself and change? And the only way to change and get forward is to completely change what you're doing. If something's not working, fix it. That's all I can really say. I mean, there's a lot more to it than just hedging and DCA. That is like a massive video course. It's not just like something you see. The problem I find to myself is, especially with margins, when I've upended many positions that are not going as well as I expect, that's probably because you're trading too large, you don't have maximum set rules, and when you hedge anyway, it returns, because you hedge your position, you can open more. So that would solve the problem. But like I said, it's a massive detail. Inside my members area is an enormous library of everything and anything you could want to know. So it's not something I can say in a sentence or how or what I do it. The longer you watch and guess and guess and guess, it's not going to get easier. There are many guys who have followed me for like a year, watched me for like a year now. But like I said, you can guess as to how you would hedge, how you would DCA, what size you would do it, when you would do it, what you would do in line with market sentiment, how many assets you trade, why you trade them, when you trade them. It's not something you can just present in like 10 minutes or 5 minutes. It just doesn't work like that. It's a skill you acquire. It's a situational judgment. So once you do something for an extended period of time, get to a point where if something changes, you can actively make a decision to get it right. Okay, there's lots of jobs where you have to do that. There's loads of jobs, like being a policeman. You start off as a policeman, you'll be very unaware of anything that could happen or go wrong. Then suddenly after 10 years, you know, or a year or however long it is, situation comes up, someone speaks to you in a certain way, and you know how to deal with it. It's just experience, but you have to be put on the right path to develop that experience with the right people, so that you can grow. And that's what a lot of my members say. They normally say to me, "Well, this is completely different. I had no idea you could do this, and I've completely changed my attitude." So yeah, I mean, the other problem with stop losses as well is that if you look at something like the Swiss yen, look how long you've come up. Okay, if you were using stops to the upside because you wanted to be shorting, you would have lost money the whole way. Okay, conversely, if you don't have the right size and you're not hedging at the right time and you're not DCAing at the right time, okay, it also would have gone wrong. But there's much more you can do when you're not restricted to closing out the market and you're a deal maker. Okay, if you think about when you, like a watch dealer or a jeweler, they don't have a stop loss. It's not just a button they can press and stop loss. They have to sell what they've bought at a certain price. That's the stop loss. But they can do many things about that. It's not automatic. They can make more money on another watch or a bracelet, and that will offset what they lost on the other piece of jewelry. No problem at all. Peaceful Antelope. As like I said, you've been here for a while. So stop losses are invented not to protect traders, but trading providers cover their arses. Like, this is how we protect you guys from losing everything in one go. Well, yes, I suppose that's true in some respects, but on top of that, people don't use it that way, and often their sizes are so large that you're absolutely right, that becomes necessary. You will lose everything in one size is too large because you're not trading the whole spectrum of the long-term market. And naturally, Forex markets are long-term markets. They will drift a very long way. Okay, and you've got to be able to deal with that. All your yens now, I mean, look at that, 50%. Okay, Swiss yen, 60%. It's these kind of drifts, not for the faint-hearted, but certainly using a stop loss is going to cause you to lose your money. That is just how it goes. So that's my problem as well. The reason why I don't use stop losses in FX markets is because they drift for such a long period of time. Or they can, and ultimately they will. Now, the problem with people trading is that they don't get that and they don't look at that as the long-term solution. I mean, if you look at your pound dollar, for example, eventually you get this, don't you? You get this massive slew of down move. But before that, all that you had was like that, okay? That was your range before, 133 and 122. And then suddenly it's 142 and under 1, or about 1. Okay, same with when you had Brexit, financial crisis, all of it. It can be slow for so long, for that reason. If you're already a jeweler, I think you'll probably find it easier to learn what I do. It might even benefit your business. But exactly, you're hedging, aren't you? You're hedging. But there's a particular way to do that. It's not. A lot of people think I come on here and I say, well, you need to hedge. But it's not as simple as that. It really isn't. It's a massive video series and there's a lot to it, and it's situational. You have to change how you're doing that at all times. I am thinking of running a promo as well because I can rebate broker referral. So if I refer you to a broker, I can give you the money that they give me, which is really handy because it mutually works both ways. You can trade and get some of the money back, things like that. I may introduce that at some point in the future, probably not right now. I might do that. It's an option. FTSE's coming down further. I'm still in profit because I haven't closed it. I short at about 744, so I'm about 42 points in gains now. I'm long on various FX pairs. But yeah, I hope that jeweler's analogy comes well. I mean, it's the same, isn't it? I mean, it doesn't matter what business you run. You're looking to buy for less and sell for more and sell for more and buy for less. Trading comes hand in hand very well with people who own businesses where you're buying and selling, as long as you're trading the right way. I mean, I only use analogies like that because for some reason people come onto their computer and they do something completely different. They don't buy low and sell high. They stop doing it. They buy high and sell low. They buy up here, okay, which you can see hasn't worked 3 times, and they sell down here, which hasn't worked 3 times, or pending not working again. So, there's a lot to be said for what makes trading easier for some compared to others. And I think that's a really important point. So there's loads of guys in here. Please do press the like button. Like I said, I haven't refreshed it yet. do press it. It's right there. It helps me out a lot. I do appreciate that. There's some very loyal people coming back. I know lots of my Academy members as well are watching this. I teach people in Dubai, Australia, South Africa, the UK, America, Canada, everywhere. So it doesn't matter where you're from. I can help you out. Okay, so we've done a lot. We've covered loads. I mean, we've had some really good questions. I think you're at a very, very significant point in the markets now. I think if you don't know what you're doing now, you're pending getting really, really hurt. I think that is going to happen when things start to kick off. So I would definitely rather be prepared for it. As always, the banner in the middle tells you how to do that. I hope to see lots of you on board. https://bit.ly/trade WOTT. I need to go off and trade my own accounts because the markets are moving and help my members. So thanks for watching, guys. Do jump on board. The link is right there to do so. If you want to get things right, you want to trade profitably today with Be Profitable Academy. Thanks for watching, guys. It's been fantastic. I'll see you in the next one. See you there.